What's going on, everybody? This is We the People, a real estate podcast. Let's begin. What's going on, beautiful people of the Bay? This is We the People. We're here live again. Actually, this is not live. We're pre-recording.
That's live enough.
We want to go live, but we need a few more subscribers. So if you guys can, please share this program so that we can get those subscribers that we need so that we can start doing the show live. That would be greatly appreciated. Today, we are going to go over rates one more time. We are going to be talking about what is a mortgage. Frank is going to give us some information about what a mortgage is. We're going to talk about the spring rush, co-signing, and gifts in type when it comes to buying a house, as well as profit and loss loans. So stay tuned here with us. This is We the People, a real estate podcast, guys, presented to you by myself, Realtor Carlos Rojas. If you need a good realtor here in the Tampa Bay area to buy, sell, invest, even rental property management, I can help you out with that. And
Frank the Bank.
All right. So if you need any type of loans, this is your man right here. Correct, Frank?
You got it, man. Frank the Bank. Lincoln Lending Group is my company right here in the little logo. We've been in business. I like these little tchotchkes. We've been in business. Actually, last year, Carlos, was our 20th year anniversary.
Yeah, man. That's special. That's, oof, man. I feel good about myself if my business was good for 20 years. You know, most people close their businesses within the first 2 years. So,
That's a real business stat. We talk about a lot of times on the radio that most businesses fail within the first 2 years. I think like 70% within 5 years, 90% within 10. There's all these crazy stats that talk about how long. And I don't know. I think basically once you're in business 10 years, you got to really try to screw it up.
Right. Well, think about the things that you've been through, you know, in terms of 2008.
Yeah.
And still survived, you know, and then now we're going through our own type of situation right now, at least as a businessman right now. I'm going through this first one myself. And, you know, going to people like you that have gone through stuff like this in the past and just finding that peace where, hey, things are going to be all right. Just keep grinding, keep going. It's important, guys. Keep grinding, keep going. You will get there. Whatever you want to accomplish, you'll get there.
Yeah, some of the business mistakes a business owner makes when things get rough is all of a sudden, you know, they'll stop advertising. There's like, oh, there's no money coming in. I can't do this. That is the first thing you should never cut is advertising.
Yeah.
And honestly, you have to think about it. When you're a business owner, and Carlos knows this, and I say this to my originators and brokers, employees, is I say, you guys got to understand, if you're a business owner, you're investing in yourself.
Yeah.
There are times when business is good that you're not having to invest a lot of money or it doesn't feel like it because you're making a bunch of money.
Yeah.
Right?
Yeah.
But then when things are bad, all of a sudden you feel it, but you're still investing in yourself. You are the best investment that you will ever make.
Yeah.
Ever.
I completely agree. And also, just to add to that, we also got to talk about adjusting to times, right?
Yeah.
We got AI that's coming in right now that's, you know, taking over a lot of companies, a lot of layoffs because of that. You know, we were talking on the last episode about unemployment was the reason why the Feds decided to increase the rates on last week's episode.
Yep.
How crazy is it? I saw an episode of the PBD podcast, and their mortgage guy was talking about, it's interesting that they're talking about how unemployment is better. And the fact was that a lot of people that are actually working their butts off are having 2 jobs now or 3 jobs now. And that's what was actually making it look better. So it was more of a trick. You know, it wasn't really that more people got jobs.
Bro.
It's that more of the hustlers actually got even more jobs. You know?
Nailed it. So what happens is unemployment figures look at the past data and they look at how many, there's a word for it, how many qualified workers there are in the workplace, right? And if you have a long time of unemployment and people end up retiring, right? Or they go and do something else that like self-employment with it is not considered employment, you could say in that sense, then all of a sudden they don't count in the stats.
Yep.
And then when you have the hustlers go and work the 2 jobs.
Thank you for pointing at me.
That hustler, right? Good hustler, hustler. When they do that, it skews the numbers. You know when else the numbers get skewed?
What?
Every single holiday season.
Yeah.
Because of what? Seasonal employees.
And elections too.
Yeah, and elections. Yeah. So we know what's going on here. But no, but the truth is when unemployment seems good, rates go up. Right? Because it's an indication of a good economy. But then you had a report that just came out last week that talks about inflation is actually up again.
Yeah.
Right?
Yeah, it is. Yeah,
so
I saw that.
What should have happened last Friday, I was very surprised, is rates should have gone down.
Yeah.
But they didn't.
Yeah.
they actually went up,
Yeah.
which is a little shady, if you ask
Well,
me.
talking about that, let's
Let's
go
do
ahead
it.
and get into it. Oh, wait, that's the
No,
wrong news.
don't
That's
show that one yet.
later.
Don't show that one yet. No, so
All right,
by
here we
the
go,
way,
here we
I
go.
never see the rates before Carlos puts them up. I don't even Google them myself. Oh
Right,
my
here we
God.
go, here
Whoa. Is that on the screen? Can everybody see it?
Yep, everybody
right.
can see that.
Wow.
So, guys, here we are. 7.8 is what Google is showing us right now. So, Frank, your thoughts?
It's lies, man. I hate to say it. It's Carlos, this is okay. So what this is showing is the rates went up like 0.4% since our last show. I think weren't we at like 7.4 on the last show? Was that right? Something like that?
Yep.
So it's gone up almost a half a point. Well, if you're just a regular consumer, you're going to read this and be like, oh my God.
Yeah.
Like I can't afford, this is 8% again. Guys, listen to me. This is a freaking lie. This is fake news. All right. And I don't know why Google does. I want to know, where's Google getting the rate from?
Yeah.
Because
I mean, it says right here.
Yeah, does it
right?
say
$300,000 price with a 20% down, which is crazy because people that put 20% down, typically get a little bit of a better
with
rate
a
or
700
help.
score.
And then we have a 700.
And this says Florida. I didn't even
Yeah.
notice that in all the podcasts. I thought this was national. This is saying, guys, listen, I'm born and raised in Florida, fourth generation. This guy only sells Florida.
That's right.
We know Florida.
Yeah.
And I'm going to tell you right now, the rates are over a point lower than that.
What about, besides that, great.
Yeah.
But besides that, why is it specifically talking about Florida? Shouldn't it be the rate, the same for the whole United States?
I actually like it better that it says that, because if it said the whole United states actually have different rates. There's
They
different.
do.
They do, and
Explain that.
Okay, so here's why. So just like real estate in one state is more expensive than in another
Right,
state,
I understand that.
because of desirability, supply
Right.
and demand. The demand for mortgages is higher in certain states than others for the mortgages to be purchased by the big lenders.
Okay.
So a big lender, they will look at a state like Ohio and see how their mortgages perform overall, or like Idaho, right?
Okay.
And then they look at Florida. Well, Florida people tend to pay their mortgages better. I hate to say it, but where you have the bigger cities and things like that, you usually have the people who are more businessmen and whatnot, and they perform more. Therefore, the rates are usually a little lower.
Okay.
Can we change that? Put the 5% down. I'm just really curious. What happens if you go to 5% down on that?
Let's do it right here.
It should go
5%.
down. Okay,
does.
good. Isn't that crazy? Isn't
Yeah.
that an interesting stat?
It
Wouldn't you think on a conventional loan, if you put 20%, you're getting a better rate than
of
5%?
course.
That's crazy. I've noticed this
Or
for
isn't
years
that
and
how
years.
it is?
No, it's not. It's
So-
not. This is real. If you put people who put down, now I'm gonna tell you why though.
Okay.
Because what happens if you don't put 20% down? What do you have to pay? Something. Come on, 3-letter word.
If you, PMI.
Boom. PMI. Right. So they give you a lower rate because they are insured by the PMI.
Okay.
So the loan is less risky.
That's crazy.
Right.
So what about I just saw some news. I don't know if, and this is off topic.
It's okay, squirrel.
So I saw something about a new 15% rule. Did you hear about that? That if you put 15% down, now you don't have to pay PMI.
Okay, so yeah, I have heard of that. So it's smoke and mirrors.
Okay.
It's new old.
Okay.
Okay. So
It did seem like it was a lender trying to just catch attention.
it's a sales trick.
Okay.
Matter of fact, while you're saying that, I'll say something that a lot of people don't know.
Okay.
Is that everybody thinks when you're buying an investment property, you need 20% down. That's actually not true. Fannie Mae allows 15% down on investment properties. But what Carlos is talking about is a little smoke and mirrors that they're telling you if you put 15% down, we won't make you pay PMI. Dude, Carlos, if you put 3% down, I can give you a no PMI conventional loan. Right.
Oh, wow.
But let me tell you what really happens.
The rate is higher.
Thank you.
Okay.
They put the cost in the rate.
Okay.
So why would I not do that for you or for anybody? I'm going to tell you why, because it's called LPMI. Lender paid mortgage insurance.
Okay.
So if I raise your rate, only way you're lowering your payment when you get to the 20% equity mark is to refinance.
Okay.
So if your rate's good and when you think it's going to be good and you want to keep it, you can't, right? If you do the LPMI, you have to refi to get lower payment. If you take the monthly mortgage insurance, then you don't have to refi. People don't know that. When you get 20% equity, you can pay for an appraisal with your existing lender and they will drop your PMI.
Right.
So I'd rather take a lower rate, get my PMI dropped, and never have to pay for a refi.
Absolutely. And with FHA, you never had that option.
11 years.
You have to pay FHA for 11 years.
Listen,
and then you
everybody
can take
says
it
it's
out.
for life because let's be honest, 11 years on a mortgage is for life. You know what I mean? Like you got a mortgage for 11 years. You're
And most
probably
people are
not moving.
refinancing, prior to that too.
Average person does some sort of real estate transaction, a refi or purchase every 3.8 years.
Right.
So I say 11 years is an eternity. After 11 years, there is a way to get rid of the PMI on a mortgage, on an FHA mortgage. Guys have been doing this 25 years. I've never seen anyone do it.
Okay.
Ever. Because generally you're going to refi. You're going to take cash out, debt consolidate. You're going to get a lower rate. You've got all these other options you can do.
Absolutely. Unless you bought it at the perfect time, with the perfect rate or something
Which,
like that.
hey, look at you. That's the reason
Right.
we're a little slow right now because a lot of people did buy at the perfect time with the perfect rate. Going back to the rates real quick. Today's 30-year fixed rate, not what Google says. Today's 30-year fixed rate is around 6.75.
Okay.
It is not. Now it's a little up, guys. I think last week I was telling you 6.5. So maybe it's a quarter up, but it's not a point up like these guys are showing, or a half a point.
Do you know why they went up again?
I think it's fake news again. It was the unemployment thing. The unemployment thing saying that there were less jobless claims is a sign of a stronger economy, so they push rates up. If they miss the mark is when rates go down. What I think is a manipulated bullshit. I'm on a podcast, so I can say that.
Say whatever you want.
All right,
We're
that's right.
free on this podcast. This is
Free!
not your radio
Yes.
show. This is the podcast.
So, exactly. So it
Let's
is
go.
bullshit. Is this that the inflation numbers missed the mark in the wrong direction? It went up by 3%.
Right.
Right? The rate should have freaking tanked.
Yeah.
I messaged my whole team last Thursday. I'm like, dude, watch the rates. They're about to tank. They went up.
Yeah.
They went up. I kind of think there's a game being played.
Yeah. It feels that way.
Yeah. You think?
It feels that way. And I just want to say, okay, so a lot of people get, and it feels like, to me, this feels played.
Mm-hmm.
We got to play the game of life, right? That we're constantly playing. As men, we're constantly out there doing business, trying to figure new things out, new trends, whatever. We have to play in this game. And if you feel like, you know what, I'm not going to buy a house, I'm going to wait. Yesterday, I had one of my best friends tell me, I'm not buying a house right now. I'm going to wait until Trump wins because I know he's going to win. And then I'm going to buy a house when he brings the rates down. I'm like, dude, buy it now. If you can, if you're pre-approved now, if you can get a house right now, especially if you don't have one and you're renting,
Right.
buy it now. Later on, if the rates do go down, you can refinance. Now, he didn't want to do it because he didn't want to pay all this interest and all these things. To me, you have to figure out how to hack the system. And a lot of, Cubans or Hispanics are really good at hacking the system because they buy a house that, with the rates that are happening right now, and they convert a garage into an efficiency.
Yep.
Or they do some type of thing that allows them to pay their mortgage more efficiently without losing. So I would say get into a mindset of doing the FHA multifamily thing that we were talking about in the previous episode.
100%
Right, get on-
FHA duplex.
Right. Get on the mindset of with this current situation that's going on, of doing something that's actually going to put you on top later, because that's how you play the game. You do things right now where your money is, you're paying yourself, and later on, your owner, you're doing what you're supposed to, and you will have the options later to do whatever it takes to survive the economy, because things could get worse, could get better. If it gets better, you're going to have options to have better monthly payments. If it gets worse, then you're already you also got more options.
No.
Right?
Let me help you on the getting worse thing, because it never gets worse. So what I would have told to your friend is I would have said, he's like, I want to wait and I'm going to get the lower rates and Trump's good again. And yeah, I hope so. But anyway, ask him, hey, friend, what rate are you paying right now? Well, I'm renting. Yeah. But what rate are you paying?
He's not renting. He's buying. He was talking about a second home.
Oh, second home. Wow. Okay. We're going to pretend like he's renting. He's paying 100% interest if he's renting.
Right.
100%. Right. By the way, if you are renting right now, and when Carlos is talking about the game and the playing, let's talk about chess.
Yeah.
You're the pawn.
That's right.
The guy who is renting to you is the king.
That's right.
Why do you want to be the pawn?
That's right.
Be the king. Right? And you can do it, guys. Oh, by the way, real quick, FHA rate, 5.875%. So it's awesome, guys. It's actually not bad at all.
Right.
Average rate over the last 40 years, 7.25%. So you're down. You're way down on that. So don't be scared of the rates.
That's right. And remember, historically, we're not in a bad place with the rates right now.
Oh, guys.
Okay. There has been worse times. There's been a lot worse times. So
3 months ago.
And also, I will say, I have I was showing houses all through Wesley Chapel yesterday. I have a buyer that's in the 320s, and as soon as we saw about 4 houses in that price range. We found one, multiple offers, coming off. It's gonna be out. She won't be able to get it because she's trying to downplay it. So the only times that I'm not encountering some type of multiple offer situation, including in my listings, it's when the price is higher, like in the 450s, 500s. Anybody that is selling their house anywhere under 350, there's gonna be a multiple offer situation unless they're overpriced it, which is hard to find those type of houses. Period.
There's price, because the new first time home buyer price is about 400,000.
Right.
And you got to kind of get far out to get under 400,000. So when you find it, people are going to be all over it. By the way, marry the house, date the rate.
That's right.
Marry the house, date the rate.
That's right. Completely agree.
That's right.
All right. So we're going to talk now about what is a mortgage. So Frank, please indulge me. What is a mortgage?
I mean,
easy question,
the
right? For
easiest, most complicated question in the world.
Yeah.
It's a great question, though.
It is, because most people don't really understand it fully. Yeah. So if you could give us a description of what does a mortgage mean, so people can truly understand.
Let's make it real easy. A mortgage is when it's a document recorded against your house when you go to buy a property, okay? And the lender, the bank, gives you a loan. It's like the promissory note. It's like when you're back in the day when your mom or your uncle gives you a loan for $1,000 and he makes you sign a piece of paper that says, I'm going to pay you back in this amount of time and blah, blah, blah. The mortgage is the instrument that tells the bank legally that they are owed this amount of money on this house. And until this note, there's two things. There's a mortgage and a note in real estate.
Okay.
The mortgage is the instrument that holds the house to the note, okay, for the lender. The note is the paper that outlines the terms by which you will repay the mortgage, okay? So when you go buy a house, the bank, you have a mortgage. You own your house. The bank does not own your house. That is a question a lot of people ask. You own your house.
If you look in the city records, your name is there, not the bank's name.
As long as you pay that mortgage payment, you own that house. It's when you stop making that mortgage payment and then the bank files what's called a foreclosure against you.
Right.
And they go in front of a judge and they say, Mr. Judge, Carlos signed this mortgage that he was going to pay us this money on this note and he stopped paying us. And according to the terms of this note and this mortgage, we are now going to make claim to his property and all of the equity in it.
That's right.
And then they will take your house.
By the way, don't let that happen to you. If you're going through a foreclosure, give me a call. I might be able to help you out, okay?
How do they call you?
813-406-9324.
I thought you were going to say on a phone.
Oh, yeah.
I'm kidding. What's the number again?
813-406-9324. Listen, guys, I'll have all the information in the description of every video. But seriously, if you're going through a tough situation, a real estate guidance like the one that we could probably give you might get you out of that situation, whether it's refinancing, selling your house. That way the bank doesn't take it and you can actually make some money back on that. Or sometimes, I got investors that will take over your loan so that you don't lose the house. And sometimes they'll pay you a little money and everything so that you can move. So whatever the situation is, just call a professional like myself or Frank, and maybe we can figure something out for you.
Absolutely will.
Continuing on, great. By the way, that was a great description. I remember reading exactly something like that, but you sound better saying it. When you read it online, it doesn't sound as good as the way you explained it.
By the way, go to contactfrankthebank.com. We have all this stuff on the site when you're watching this, but contactfrankthebank.com, and I'll call you and we'll work something out.
Absolutely. On the next topic, we're going to talk about spring rush. Guys, the spring rush is coming. Okay. We've been talking about it in the previous podcast, and now we have it here available for you. Check this out. Spring home buying season is near. Real estate pros say that this year's rush could push prices up 5% after a week 2023.
Yep.
So we've been talking about this. We agree on this.
100%.
Yeah. We understand that the rates kind of like go with this. So the only thing that would, make our judgment on this a little bit different is if the rates go up like another 2% or something like that, right? Which we're not expecting that to happen.
No.
But if it is going to happen, you better buy right now. Just saying.
Which is even a bigger reason to buy right now.
Yeah.
You can't lose.
What are your thoughts on this, Frank?
All right. So the spring rush is the We call it the spring rush because it's usually the beginning of March when people really start looking for the new homes. It's like they get past the holidays. It is a rush. You're going to have more supply and demand. People are going to list their houses. More people are going to want to buy a house. Why do they start looking in spring? Because most people would prefer, if they have kids, especially school-age kids,
Especially people with kids.
they want to move in the summer.
That's right.
So if you start looking in March, by the time it gets to April, by May, you've probably found the house. Yeah. You've been approved, and you go into contract, and you want to close in May, June, or July because it's the least stressful time to move your families and all that. So the busiest 6 months of the year, we're about to start in 2 weeks. March, April, May, June, July, and August.
That's right.
Okay? Guys, if you are ever thinking, it is the time to do it right now. The sellers are still working with people, still giving seller concessions, discounts. Why are they doing it, Carlos?
They want to sell.
Right.
Obviously.
There's less competition.
Yeah. I'm telling you right now, there's definitely a lot of houses that are overpriced on the market.
Right.
And I think that's one of the reasons why we're seeing the news flash of, too many houses on the market right now. I'm telling you, it's those the people that price it right, it gets off the shelf right away. There are plenty of buyers out there waiting. There are plenty of buyers that are going to be coming out right now because of what Frank said, and it's the same every single year. If anything, it was the worst during 2020 and 2021 because of all the COVID situation, but this is how real estate works. If you're a real estate agent, if you've been doing it for years, everybody talks about this. You go hard right now because this is the time to make money. This is the time where all the buyers and sellers are going to be coming out.
Yep.
And this is the time to attack. So, it would be the same for you guys. So if you're a buyer, more items are going to be on the shelf. If you're a seller, this is your time to put the house on the market. So take advantage of it, is what I would say.
If you're a seller, I'd probably want to list my house within the next 2 weeks so that I'm one of the first ones looked at when the spring rush starts. And if you're a buyer, I would go to contactfrankthebank.com or go to Carlos's website. And I think you need to get the pre-approval done now, and you need to beat the rest of the competition.
Absolutely. And now, since we're talking about buying houses, you get into buying a house. Let's talk a little bit about the procedures that happen while you're buying a house. For example, we got co-signers and gift letters. What are these things, and how can they help the regular buyer, maybe a buyer that doesn't have the full amount of money or the right things to make it happen? I know we've worked some miracles on a lot of clients in terms of gift letters and certain things that we need to create the loan and make it happen for our clients. So can you specifically talk about this co-signers?
Absolutely.
How does it work?
So co-signers and gifts. So a lot of people ask me on a mortgage, especially a first-time home buyer, they usually have already bought a car before. So they're used to going in and you got to get pre-approved. And when you buy a car, let's say, you don't make quite enough money yourself. That could be that, or maybe you don't have enough money for your down payment on the car and you don't qualify for 100% financing. So let's start with the one where you don't make enough. You ask your mom or dad or somebody to co-sign for you on the car. Guys, you can do the same thing in a mortgage.
That's right.
And here's the beauty on a mortgage. Your parents who co-sign, or family or friend or whatever, they do not have to live with you in the house. It is just a co-signer relationship. They are called a non-occupant co-signer. And we can do it on every single loan program. We can put a co-signer. So whenever we run an application for you, and we see that you don't quite show enough reportable income to qualify, the first question, besides, are you telling me about all your income? is, how about you get a co-signer? And then the parents always want to know, well, how's this going to affect me? So I'm going to answer that question. Mom and dad, if you co-sign for your kids and you want to buy another house, we will not count the mortgage payment against you as long as your child is paying it on time. And the longest on any program that we have to prove that they've paid the mortgage on time out of their own bank account, is 12 months. So once that time is hit, a lot of times we can do it immediately, but once that 12 months is hit, we show the payments to the underwriter and they don't count that payment against the parents, even though they're on the mortgage.
Yeah.
It's awesome.
Yeah.
So now gifts. What a gift is, very simple. You don't have enough money of your own to bring to the closing. You can ask a relative to give you a gift. They transfer money from their bank to yours. They write you a check. You get to use it for the closing costs. You don't have to pay it back. You're not supposed to pay it back according to the paperwork, but listen, we're we the people.
That's right.
So we're going to talk We the People real.
Yeah.
You're borrowing money from mom and dad. If mom tells you to pay it back, you pay mom back.
Yeah.
Okay.
Absolutely.
But mom's
I know
gonna-
it's called the gift letter, but some people want their money back.
But mom's going to sign a letter saying that you don't have to pay her back.
Right.
But you want mom to help you out again, you better help mom.
That's right. That's right.
So, yeah, gifts.
So and just so you guys know, this money needs to be sourced. Okay, this can't be money that you just pulled out of your save or that you've been saving for years. It can't just be cash that you just deposited. It needs to be seasoned for at least 2 months on the bank.
60 days, but hold on. I'm gonna blow your mind. And let's save that one for next week because we can elaborate more. This will be the last thing we talk about. Okay. So you can use cash, Carlos.
Tell me, Frank.
Cash.
Tell me how we can use cash. This is news, guys. Pay attention.
This is good. He doesn't even know about this. This is great. So if you're doing an FHA loan and you've got cash sitting in your mattress, or your parents have cash in the mattress to give you as a gift, as long as you document how you saved it. So you get a little ledger out from Staples, and every time you put $1,000 in the mattress or in the safe at your house, you write down on February 16th, I put $1,000. On February 20th, I put $200 on this, and you hand that ledger to an FHA underwriter, unless the bank has an overlay, which we don't. They will have to take that money.
I like that.
And people don't know it. So you can then take all that cash and deposit it in your bank.
So
that's for my Cubans out there.
Hey, make a ledger.
That's right.
You should have it already with you. Let me just say.
Hey, how do you say make a ledger in Spanish?
Yeah, I don't even know how to say. I don't even know how to say ledger in Spanish.
Because I don't think there's a word for it. So I was trying to defer to you.
Apuntalo. Say that. Apuntalo.
Apuntalo.
There you go.
Apuntalo. El lechero.
El lechero. Apúntalo.
Apúntalo. He probably just told me to say I'm an idiot.
No. I'm just saying write it down. Write it down means apúntalo.
Yeah, I'm Cuban too, but I only medio cubano.
Medio cubano.
Yeah.
Es de un cubano americano.
Cubano americano. Yeah.
All right. So we're going to talk about profit and loss next week, guys. This will conclude our episode today. We had to keep it a little short because we were figuring out all this new equipment that we got going on today. We want to thank you for being here with us. We do need new subscribers, so please subscribe to our channel so that we can start doing this show live. We want to do it in a way where we're kind of like talking to the comments and answering some questions live and giving you guys that space to answer questions live. If you guys have any questions about real estate, please comment on this video. Just leave us a comment so that we can talk about it on the next episode. Any questions related to real estate, we are gladly here to answer and help out. And guys, remember, we are Frank the Bank, your man right here for mortgages and loans and many different types of loan programs, not just for first-time home buyers, but second-time home buyers, investors, or any type of home buying that you can do. We got the bank right here, and we also have your realtor, Carlos Rojas, myself, that can help you get into a home or sell one or manage one, whatever it is that you need in terms of real estate, your portfolio, whatever you need. I'm right here, and I have your back. Frank the Bank, contact frankthebank.com.
That's it.
RealtorCarlosRojas.com. We are out. This is We the People. Subscribe. Peace out, guys. Take care. Thank you so much for watching, everybody. This is We the People, a real estate podcast. Make sure to subscribe.